Okay, this is Christian Dye and Mike Stewart, and it is December the 17th. We are talking about real estate in Vancouver and a little bit about a market update. So Mike, you still there?
Yes, sir, right here.
Perfect. Okay, so let's get right into it over here. What I wanted to do is to first of all say, let's all stay safe, follow the rules, and a big gratitude to our frontline workers over here. The end is in sight. Hopefully, we just have to hang on over here. So what I want to do is I want to also remind everyone that the information given today is not to promote the buying or not buying of any real estate. We advise that you do your own research. We're only giving information for educational purposes only, okay? So a quick little market update with some statistics. The first thing I'd like to point out is real estate in Vancouver is doing actually very, very well. So what we have over here is a November sales are up 24.6% above the 10-year average. So what that means is that we're about almost 25% up the average over the last 10 years, which means we're incredibly up. Only 2 times in the last 10 years has this actually happened. Analysts are predicting that sales prices going down when sales to listing ratio is below the number 12. So if you take all the, if you basically take all of the sales that have occurred, divide it by the listings, you're going to get a number. When this number is below a 12, then that's where you start to see that prices tend to go down. In Vancouver, currently, we're at 27.9% on detached homes, 40% on townhouses, and 23.9% on condos, which
And
goes.
just one thing I wanted to add to that: the higher the number means the greater the upward pressure on prices. So yeah. Anyway, but continue. Sorry, Christian.
Absolutely. So the higher this number is, that actually means that prices will not be being pushed down; they're actually being pushed up, going the other direction over here. So right now, what does this mean over here? 2021, I cannot see how with the low interest rate environment, this thing should be going down in terms of prices. Things are heating up. I've got clients who are talking about it. They're getting outbid right now. If you're correctly priced, you know, and Mike will talk about this more on his section over here. But right now, for those of us looking to sell, for example, market is, you know, trending up over here. And what I always like to do is quickly make a brief note about what is going on in the stock market as a comparison. 2020 was a fantastic time to be in the markets if you basically were putting new money in when COVID hit March, April, May, June. But our markets really have recovered. So a quick little stock update is that the stock market in general is back to pre-COVID levels over there. So if people need to have money moving, is the stock market a good opportunity for brand new money? John Lee from Fundstrat is saying that there will be a pulling back period in Q1. And I could see that because so many things went up so quickly, so fast. Take a look at Disney, take a look at Tesla. Like these things just went crazy, crazy valuation. So a natural pullback is probably what to expect. And then he says by end of year, we should be back to, you know, a normal market conditions. So we should finish off fairly well in the stock market, according to John Lee from Fundstrat. But if it was me, I'm looking at real estate, to be honest. I think that is the better opportunity in 2021, especially because of the low interest rate environment. Okay. So a couple of things that I wanted to highlight and point out over here. So some of them are some of the things that I really like are, if we take a look at the statistics of the benchmark prices right now, and this is a residential composite. So this is actually including not only condos and townhouses and detached homes, kind of including everything. What I care more about is what is the changes. So if we take a look at the benchmark of where housing price averages are, but then we take a look at the 1-year change, every single 1-year change is up. So from where we were last year, everything has of course gone up. But the interesting thing is if you take a look at the 3-year change, some are up, some are down, but it really hovers close to zero, to be honest. But that goes to show me, depending on the area you're in, we're kind of at 2017 pricings a little bit. If you take a look at Vancouver East, negative 1.1%, that basically means we're pretty much at the same prices we were getting back then. But there could be some opportunities out there. If you take a look at West Vancouver compared to 3 years ago, we're actually down 11%. There are opportunities out there to potentially get some fairly good deals. And then the other thing he says, oh, are we headed for a crash? Are things going to go poorly over here? Take a look at the 5-year. Take a look at the 10-year change. In the short term, there could be some volatility. But in the long term, our real estate market has always held to be quite strong. At no point has it ever been in the negative over a 10-year, not even over a 5-year. Mike, do you want to add anything to these statistics?
Yeah, no, you bring up a good point. We are seeing, 2017, the market did peak for many markets. And, some markets, particularly West Vancouver, west side of Vancouver, Richmond, places that were highly affected by the overseas money that was flowing in before the foreign buyers tax. We've seen price declines there from 2016, from 2017. But I personally think that you're going to see those markets. Well, the west side of Vancouver has really picked up. Richmond, West Vancouver, not so much. But I think you're going to start seeing those markets pick up because of what's happening in markets like East Vancouver, North Vancouver, and various other single-family home neighborhoods where you've seen competing offers and the market going absolutely crazy. I wrote on a place. Actually, I didn't write it. The client didn't want to compete, but it was a house in the Grand Boulevard area. It was a 1985 house on a 6,000 square foot lot, 3,500 square foot house, 3 bedrooms, 2 bath up, immaculate 1985 condition, listed at 1,599, sold for 1.905. Myself, yeah, and even like 10 days ago, or last week, I had clients purchase a house in East Vancouver in the Burrardview area. It was a 1912 house on a 33 by 122 with some water views. It listed at 1,399, and we got it for 1,635. So the single family house market is on fire right now. But it's not. The market's not. We're not seeing that across the board.
Yeah, like I think depending on the area and depending on what it is, I have a family member who just this last week was putting an offer on a house, and she's kind of that profile of many people. Lived in a townhouse that's probably worth about $850. Wanted to upgrade to a house that's worth about was listed at 1.3. She knew that there was going to be some multiple offers. She took her best foot forward, offered $100,000 over asking, and was outbid. So it depends on how it's priced. I'm not saying everybody should be, over doing anything like that. I'm just saying what happened to this one person for a house that she did not get. So I think that's a good little transition to you, Mike, and really saying, what is going on? What are you seeing with buyers and sellers and activities, and in what areas?
Yeah, so what we're seeing is a very uneven market situation. Anything that is low density and offers people the opportunity for physical distancing, we've seen significant rises in sales and sales ratios. The most recent stats specifically mention areas that we've mentioned before, like, for example, the Sunshine Coast, Gulf Islands, we're seeing sales ratios there extremely high. Like, for example, the Sunshine Coast saw the largest increase in year-over-year demand at 106 home sales in November 2020, and 82.8% increase over November 2019. So just huge surges in places like the Fraser Valley, Squamish, Sunshine Coast. The Okanagan is on fire right now. Whereas, and you look at places like East Vancouver, very much a locally oriented market. North Vancouver, a very locally oriented market. Multiple offer situations on single family houses. Whereas condos in downtown Vancouver have been very soft until actually just quite recently. I do quite a bit of business in downtown Vancouver, and my listings in downtown Vancouver up until about 3 weeks ago were dead as a doornail, nothing happening. And people starting to get very, very good prices on condos downtown. And if you look at the stats, and I can send out the stats when we're finished, you've seen that condos on the west side of Vancouver, the prices have slid. Whereas places like the Sunshine Coast of Vancouver, their Sunshine Coast, the Fraser Valley, East Vancouver, North Vancouver have seen price increases for single family houses. So what you're seeing is high density is having a lower sales ratio than low density. Low density is having a higher sales ratio. You're seeing multiple offer situations. You're seeing prices rising. But the interesting thing is it's not a uniform thing. It's more the higher sales ratios and the huge demand is more pronounced in places that are affordable to the local market, whereas places like West Vancouver, the west side of Vancouver, not so hot. West side of Vancouver a little bit, but like West Vancouver, for example, in my view, is a fantastic buyer's market. It is soft, it is quiet. Properties you can negotiate on price. I've been watching for myself in that area, and you can definitely negotiate on price, and properties are sitting on the market. Downtown Vancouver is also another place where I think you can negotiate on price. One bedrooms in Vancouver were very slow up until about 3 weeks ago. Now we're starting to see activity, but that sales activity is at a lower price point than it would have been in 2017 and unfortunately late last year.
Wow, incredible. Now let's get to some other nitty gritty over here. If someone is a buyer on the buyer side over here, I'm assuming that asking for a discount is asking for trouble, depending on what you're going in with. But over here, if it's correctly priced, should we be going with asking? Should we be going 5% over, or are we comfortable with 95% of the price, or we won't have a chance?
Yeah, I understand. Yeah, so it really depends on the property and what it is. Larger properties, you can negotiate more than smaller properties in this market for condos. Now, but it really depends on what it is. If you're not competing, there's no need to go in over asking. It's just, but the thing is when you're buying a property, talk to that realtor you're working with and, let them help you understand what's happening with the situation in the market and the situation in that place. And a good realtor will be able to give you the advice to get you the property in the way you want to get it. Not everybody wants to get involved in a multiple offer situation. A lot of people do. But the key is, work closely with your realtor and go with the advice they give you. But yeah, advice to buyers right now is get out, look at places. The holiday season is a particularly good time to get good deals as a buyer, because a lot of the sellers who are still in the market now are extremely motivated. And there are a lot of people who are just not doing much because of COVID-19 and also because of the Christmas holidays and various other holidays like Hanukkah and whatever, Kwanzaa at this time. So they're distracted by family stuff. And, in the holiday season, there are less buyers out and the sellers that are on the market need to get sold. So it can be a very good time to get very good deals.
Yeah. I guess one of the things that I was thinking about is that people, if they are considering and they are not pre-approved yet with these rates, you got to get pre-approved for sure. It's 120 days good pre-approval. If the rate goes up, you get the lower rate. If the rate goes down, you get the lower rate. If you're thinking of buying, and the other thing too, of course, it helps to figure out what you'll actually qualify for. There's no sense in putting in a bid and you don't even know what you qualify for. So Mike, 2021, the future outlook, we've already talked about it. There's absolutely no signs that the prices will go down. But what are some of the areas that you think that there's going to continue to be quite strong? Where in the Lower Mainland should people be a little bit, nervous about if they're thinking of going into that area, because the bidding wars are going to start again?
Yeah, you know what it is I think across the board, everything is going to boom. Right now, high density stuff, like I've said, has had a lower sales ratio. But once the vaccine has been rolled out, I think a lot of people are going to get sick of low density living and being sort of isolated and bored, and are going to want to live in the downtown core. And I think that you're going to see a big revitalization of the downtown core. So I think that you want to buy stuff that people don't want right now, but which they normally do want, and which is living in the downtown core. So I think everything in 2021 is going to see increased demand, because you've got interest rates like HSBC came out with a 0.99% mortgage, which is just unprecedented.
Jeez.
Now, of course, that is for an insured mortgage, so you have to put less than 20% down. But still, I've heard of HSBC offering a 1.395-year fixed. 1.595 years fixed are everywhere. And with the amount of stimulus going to the economy in the form of quantitative easing, which is a fancy word for printing money, this massive deficit spending on the part of the provincial and federal governments, and these ultra low interest rates, the real estate market can go nowhere but up. So I think, right now, well, from what we're seeing right now, lower density stuff is busier than higher density stuff. But I think that will change, and you could see a lessening of demand for high density stuff once the vaccine gets out and people feel more comfortable living in the downtown cores. But right now, for apartments, another reason why I think they're really good deals is because a lot of people who own these places and rent them out, particularly furnished rentals, are having an issue because there's no immigration, and immigrants tend to be the ones who, immigrants when they come to Canada tend to rent properties and tend to be in the core of the city before they understand the city and then move out into the burbs. Two, there's no foreign students, and they rent a lot of these furnished rentals in the core of the city and anywhere near any major educational institutions. And then three, there's no travel, so there's no Airbnb, there's none of that stuff. So buying, in my view, buying a revenue property in a place that has immigration, foreign students, Airbnb, this is the right time to do it, because there are people who have to sell and are selling for less than what they would have sold for in 2019 and 2017. I think detached houses are a great bet because they're not making any more of them, or they're not making any more land, and they're not making more lots in the greater Vancouver area. If anything, the amount of lots is constricting every time a condo building gets built, because primarily they're built on assembled single family house lots. So yeah, I think with the amount of stimulus going into the economy, which is unprecedented stimulus, you're going to see the real estate market absolutely boom. And just in the nature of full disclosure, like I'm going to be buying some revenue properties this year, actually probably within the next few months, and buying a larger house for my family. So and just one last thing I wanted to say: if you look at you buy a $600,000 revenue property at 1.59 with a 25-year amortization, just your principal payment will basically you'll basically pay down almost as much as your down payment in that 5-year period. It'll be about $100,000 pay down, $20,000 a year in principal payment for a 25-year AM, 1.59%. It's shocking. But anyway, sorry I interrupted.
No. And I was going to say, you and I are in great conversation about me doing the exact same thing. This is the year that I want to expand my real estate portfolio and take advantage of these rates and take a look at some of the wonderful things that are going on. I guess it's like anything else. I think you kind of almost even said it. You said, take a look at the things that people don't want. The problem is when everyone is chasing after the things that everybody wants, you get the bidding, you get the pricing, and it's pushing it up. It's the stuff that you don't want, but that's just what they don't want right now. Then it shifts, then the cycle shifts.
Totally. And it's going to shift. And I've seen it shift so many times. But yeah, this is the time to buy a condo. Another thing that we've been looking at too is single family houses in the Okanagan. You can buy houses in Kelowna for like $750,000. If you're lucky, you can get about $3,500 in rent. 20% down, it's cash flowing. So there's some really good opportunities right now in British Columbia because of these fantastically low rates. And the reason why these low rates are so powerful is because it's making housing so much more affordable for so many more people. And people who are buying at 1.59% with 1.59% mortgages or 0.99% mortgages, the principal pay down is unprecedented. It's so cheap. It's better than renting because 70% of the money you're spending in your mortgage payment is going to pay you back the mortgage.
Yeah, no, that's fantastic. That really, really good. What I want to do now is I just sort of want to shift and talk about, what my philosophy has always been here at Latitude West as to how to accelerate wealth. And it isn't about putting all of your money into the stock market. My practice has never believed that is how you're going to create a lot of money. I think, at the very, very high levels, There are people who make a lot of money inside the stock market, but I think for your typical person, they accelerate wealth when they use this different formula, and that is having some money in the stock market, but having also money in the real estate market. And that's not only your property, but it could be more than one property as well. And then having access to cash so that you could take advantage either of the stock market, like what happened in March, or the advantage of the real estate market of what I believe will be happening in 2021. So what I do is I encourage people to look outside of their narrow view of investing. And of course, I invite you to work with a person like myself, or to have a conversation with a person like myself. With people with questions, now would be a good time to put them in the chat, and Mike and I will field them. While you're devising your questions in the chat, I want to talk about some case examples of some cases that I've worked with to show you how my financial practice is a little bit different. This is very typical. You get a newly married couple, and both of them happen to own condos. They both have real estate, but now they have some decisions to make. They want to start a family and upgrade their home. Well, what are their options? They could sell both condos and upgrade. They can keep both as rentals and try to save up enough for a down payment on their upgraded home. Or they could keep one as a rental and sell the other one for a down payment, but then they're scratching their heads and saying, well, which one? This is a perfect example that is literally valued in the hundreds of thousands of dollars if they make the wrong move, if they make a mistake. There is no clear answer to this unless you do a cost benefit analysis with multiple pieces of information needed, such as rates, such as growth rates, such as areas. This is a perfect example of what I do with my clients and helping them to determine that, because they themselves on their own aren't sure which one to do. They know the options, and of course they're what we'll call their financial advisor, who's doing their stocks and mutual funds. Of course they're not going to be much help if they do not know how to do the analysis. And if someone did give you advice on what to do, but they did no actual analysis, and I'm talking about a cost benefit analysis, then I would not take their advice if they just sort of gave you a guess. Another example is I work with a lot of professionals who are incorporated, such as dentists, physicians, and lawyers. So now I have one who owns a successful practice, personally incorporated, has 2 real estate properties as well as a basket of stocks, but wants to buy more real estate. And they also, of course, are subject to a high tax rate. So of course they want to also lower their tax rate. So now they've got options of, do I sell the stocks for the down payment on the new real estate? Or do I sell one of the existing properties to buy the new real estate? Or do I leverage off of the existing real estate for the down payment? And then there's, do I do this using a holding company? Do I own it personally or put it in the corporation? Should I use a joint venture? And so these are the types of questions which very smart clients of mine, but they don't have the background or the analytical experience to figure this answer out. And like I said, this goes far beyond investing in mutual funds, for example. This is high level cost benefit analysis and this is the type of work that I do with my clients, and my clients are mostly attracted to me because of my experience in real estate. So my analytical experience would help to show what is the net value when we do cost benefit analysis. And of course, the majority of people cannot figure this out on themselves, nor should they. That's what you have professionals there for. So I always have encouraged people to connect with me if you're in these types of scenarios where you've exhausted the other resources of your financial team, but now you need somebody who actually specializes in this area and is able to show you what is the value in 20 years of having 2 properties versus 3. Does it make sense depending on your financial situation, your job situation, and your goals? So I invite people to always use not only an advisor, but the correct advisor. Statistically, your wealth goes up significantly, further when people actually don't try to do it on their own and they have used an advisor. And there have been numerous studies to account for this. I show strategies to clients that they never even heard of, especially if they're incorporated, especially if they've got an operating company with the possibility of creating a holding company. So I invite people to connect with me. If, you know, we always like to see if there's a fit. We start with a conversation, just like with Mike, you know, picking up a good realtor. You first start with a conversation to see if there's a good fit. So we're at the tail end over here. So here's some of my final conclusions. Do not try to time the market. And that's both the real estate or the stock market. Instead, pick a strategy, have good advisors to help to guide you. So what are my predictions? I believe because the interest rates are going to stay very, very low, demand for real estate is going to be very, very high in 2021. I cannot see prices going down. What am I doing with my current clients? Reviewing their strategy and ensuring they're taking advantage of opportunities in a safe way. I invite you to set up a phone call with me so that we can talk to see if how I can add value to what you're currently investing in makes sense. So we'd also like to invite you in January. We're going to be having the same webinar where we review what's going on because markets can shift quite quickly. Hot areas to invest, Vancouver real estate update. The next time is January 14th, which is at 6 p.m. You could register at latitude-west.ca/workshops. This should be on our website now. And this is a record, we will record this and send it to all the participants as well. So what we would love for you to do is to take this recording and forward it to your friends. Forward it so they could listen, forward it so they could take advantage. You be the hero that's going to make them a lot of money in 2021. So if you're ready to connect, how can you connect with either Mike or myself? With myself, you would reach out to my assistant and we would set up a quick time to talk. Assistant@latitude-west.ca would be the way to reach out to myself. If you want to reach out to Mike, Mike at mikestewart.ca, or you can text or call his cell 604-763-3136. Now, I would encourage that you connect with Mike. I would encourage that you connect with Mike if you wanted the full report. If you said, you know what, Christian showed a little bit of a report of all the statistics of what's going on, Mike's got the full report. He invites you to reach out to him and he will PDF you and email you this full report. But Mike, was there anything else you want to conclude with there?
No, thank you very much, and happy holidays to everybody there. Really appreciate you joining us. And again, if you guys have any questions about real estate, the real estate stats, properties, anything like that, pre-sales, existing properties, houses, condos, renting them out, anything like that, feel free to reach out to me at 604-763-3136 or email me at mike@mikestewart.ca. And thank you very much for joining us, guys.
Yeah, Mike, if you'll stay on the line, we'll field questions if there are any, but I will stop the recording now.